So everyone knows that the goal in trading is to compound your trading account, which will allow you to scale up your trading business and obviously make you some more money. So as your account size increases, so does your ability to trade larger position size, which in a perfect world, that just becomes wash, rinse, and repeat. But in order to do this correctly, you have to start trading right now as if you are trading large size right now. See, the trouble is, a lot of traders who trade just single or a handful of contracts, they trade like they're one-lot traders. And before we go on, Mike over here at Netpicks, I think he's one heck of an options trader. And what he did is he wanted to share some of his approach. And he has done so. And he made this free download, and he calls it the top 12 NASDAQ superstars. So you can download that. The link is above or it's below in the description, and it's free. So I want to head back to start talking about trading size again. And before I go on, just take a second. You can just subscribe to the channel below. So trading as if you are trading size right now. Well, you want to make a lot of money trading in the future, right? We all do. And the route is to perform on a small size, and then you scale up the number of contracts in order to multiply your future earnings. So a trader who can average 2 points a day on the ES trading one lot is not going to become rich or even be able to trade for a living. It's just not going to happen. But if you increase the position size by a factor of 10 or 100, and then the number of ticks that you can pull from the market in theory is going to increase dramatically. 2 points on a one lot, it changes to 200 points trading 100 lots. See, the problem is though that a trader needs to change their mindset before they can start increasing the lot size. And this can be an issue if you're not careful. And there is a cost to small position trading. So let's take an example of the ES. Your average trade might look at 1 or 2 contract positions. And that's sensible. It's a great approach for the reason that if you have a large count to begin with, your chances of making money consistently straight away, they're pretty slim anyways. So the aim of the game is to keep the cost of learning to trade to a minimum. The trouble is that in terms of money, the swings are going to be relatively small. And this can lead to the issue of not placing enough importance on a trade of small size. So you might be thinking that it's not a problem thinking like a one-lot trader if that's what you are, okay? But it is a problem. If you can't approach the market with the same degree of importance when trading one lot versus 100, then you're probably not following your plan properly. And not following your plan, that's likely to mean not making money consistently, which in turn means not trading bigger size in the future. As you're developing as a trader on small size, hey, you know what? You're learning all the time. And it's how you react to situations that will start to create strong habits that will act as the foundation of your trading. So if you don't treat trading as seriously as you should, then you are probably forming bad habits, such as not abiding by your stop loss locations, or you're just trading impulsively. But even more important is the fact that the longer you take to begin to trade as you would if you're trading a larger size, the more time you've lost. Now, this may seem like a trivial point, but when you consider that the process of learning how to trade happens over the course of a lot of sessions, it's not surprising that there are traders who take years to begin to get a hold of consistency at any level. So your time's precious, right? And you're never going to get back what's already passed. So how do traders who have earned that right to trade larger size act differently? Of course, there's a variety of aspects to that question, but in terms of trading effectively enough to warrant a large position size, 3 points are obvious. They act decisively when the time's right, and they make sure they do not miss their setups. They do not take rash or impulsive trades because it always matters when a lot of money's on the line. And they accept the risk of trading, and that means that they're going to have bad trades. They're going to have bad days or weeks, but they stick to their stops and their daily loss limits no matter what happens. But to bring these ideas to life and have them really mean something, there's one change that you should make today. Change the way you think in terms of P&L from dollars or ticks to ticks per lot size for each trade. So this means if you make 3 points in the ES trading one lot, you've performed better than if you make 100 points trading 100 lots. In the first case, you made 3 points per lot or contract. And in the second case, you made 1 point per lot or contract. Normalizing P&L for size in this way, it allows you to appropriately gauge day-to-day trading performance regardless of the actual money you gained or lost. And assessing performance by looking only at the dollar gain loss, that can artificially boost your confidence when you're taking very few prices on large size than normal, and also inhibit a trader's desire to press forward in good trading conditions, as the money made can seem like a pretty decent amount. But of course, watching your dollar P&L can also evoke strong emotions of fear and greed. But you have to trade as if you have size right now. If you think big and trade like you have size now, you're going to have every chance of using position size to leverage your profits. So you make sure you take your trades when they present themselves. You don't trade impulsively, ever. You always respect your pre-planned risk limits. So changing the way you measure performance to tally the number of prices you make or lose, irrespective of the size you are trading right now, that can help you to start to treat your trading with the respect that trading large size demands. Thanks for listening. I hope you download that free PDF, and we'll see you in the next video.